Hey guys, it's that Dividend guy here, and I'm going to give you another update on my portfolio for today. So, wah wah wah, I'm down for the day, about $217. I'm down $75 for a week, up about 500 bucks for the month, up about 160 for 3 months, down about $17 for the past year, and up about $60 for my all-time. It is funny to come back and go back and look at different videos and see how much the portfolio fluctuates from a day-to-day basis, and this is something that new investors are really going to struggle with. I'm not like a super seasoned investor. I've only been at this for like close to, I think, 2 years now. So sometimes when I see stuff like that, that's tough to deal with. I mean, emotionally, I'm fine, but a lot of people, newer investors, they don't understand how much the stock market can fluctuate. And when you have a decent holding, as in like, 40 to 60 shares of something, you times a loss by that amount, you're going to be down 120 bucks, for $2 a share. And that's hard for some people. So I just saw that and thought, it's okay. It's okay to be down because the stock market fluctuates, and with dividends, I'm still coming out on top. So I'm not super worried about it. Anyway, let's take a look at who's killing my portfolio today. Alright, that's about total that I have in the stocks. Let's go percent change. So, MO's up. I did buy 2 more shares. Like I said in another video, I got rid of Macy's and Tanger Factory Outlets. Don't have anything against those companies, but they don't have the status that I want. So, got rid of them. Let us look. So, 2 cents on AbbVie. Awesome. Nothing on AbbVie. Damn it. I missed out on profits. Missed out on like $1.80. So sad. Let's look. Total gain loss. I'll do that instead because percent's funny. So I'm down 400 bucks on AbbVie. It's funny because it said I was up 2 cents. Let's look. Yeah, average cost is 45 bucks. I'm down 5 bucks a share. Again, not a big deal. I'm going to keep reinvesting into that company. Anyway, Coca-Cola. Sometimes you're sideways. Sometimes you're up. Today you're up. AT&T still being a monster. Let's look and see what that PE's at now. 37.37. What's the 52-week high? Yeah, the 52-week high is still about 50 cents, 60 cents away from the 52-week highs. But look at that PE. Even after all this climbing that it's done, it's still only at a 16 PE. You want to know what the market is at right now? A 22. So, this is still a pretty well-valued stock, even after it climbed like that. That's crazy. See, look at my average price, guys, at 31.10. I'm probably not going to be touching AT&T, but the issue that you run in with the stock market is that some billionaire philanthropist or whatever decided he needed to buy $3.2 billion worth of AT&T shares, which is why the stock price went up, because some big hedge fund or millionaire decided that he needed to get into AT&T stock because he saw it was undervalued and thought it could be to $60 a share. So now as an investor, it's hard because I don't know if okay. I knew that with the acquisition of Warner, in my calculation, that AT&T is undervalued. I haven't done that again to figure out how I think it's going to be, and it's hard to calculate how well a stock will do once they've really started taking out debt, and once they've taken out their least profitable product, because they got rid of DirecTV, right? So now they don't have that debt and that declining user base. They're focused on strictly streaming in their telecommunications with the Warner content, kind of being shared between both of those platforms. So, well, I guess the streaming service could be on the phone anyway, so they could all be putting it in the same thing. But you have to decide as an investor, are you willing to get your average price up? And for you growth investors, this is an issue because now AT&T is near its 52-week high, and if you buy it now, as you could see this morning, it tanked. Not really, but I mean it dropped. So it's like you're playing at 52-week highs. You're playing in a market that's overpriced according to everybody, and that there's going to be a huge stock market crash. So how is AT&T going to fare if the market crashes? I mean, regardless of the Warner merger and the DirecTV, and they're paying off their debt, they're doing things that are going to help their company. But in the wake of a market crash, the market doesn't care, right? If the economy collapses, AT&T is going to drop. Maybe less than other things, less than like a growth stock or tech, but it's still going to drop. So it's like, do you wait to buy more shares, or do you buy it where it's currently at and boost your average cost up by $6 a share? For me personally, I look at the PE, so I'm probably okay to be buying more. That wouldn't bother me a lot. It's just I don't have enough to reinvest in a share. As you can see, my my number of shares is 62, which means I can only buy AT&T at $31 a share, which is about what I've been buying it at, because that's how much I get when I reinvest my dividends. So now I don't have enough to invest, so I probably won't. But if I have extra cash that it's just sitting in my portfolio and I have enough to buy some AT&T, like a share of AT&T, I'll probably do it. But again, as an investor, you have to calculate what you think the company is going to be worth. And to be completely honest with you, I bought it at 31. I bought it when they announced the merger because I knew that I value Warner content. And that, if you look at Warner's stock price, is $43, or let's say it's $40. AT&T was $30. So together combined, the value of that company should be about $70 per share. So if you're getting AT&T with Warner content now for less than $70 or 60, whatever, it should be a bargain, right? Because together those companies are valued at $60 to $70 per share. And AT&T is now the conglomerate of both. They've come together, acquisitioned, and now they have Warner assets, and they're less than $70. So for me, that seems like it's a buy. But again, if you're an AT&T shareholder, whatever investor, you do your own calculations. This is not investment advice. I'm just saying how I thought about how I projected it, right? And that I'm still comfortable buying it, even though it kind of looks psycho because I'm at 31.10. Why would I boost it up like that? But again, remember, we're dividend investors, so my average cost basis doesn't matter to me as long as I can buy the stock forever, as in I can reinvest in a share regardless of where the stock price goes. That's my goal, right? So again, I think it's worth it for me. Might not be for you, but let's go to the next one. AbbVie. Oh, let's look and see how much it's down. It's up. What? No way. I'm up. How much? $48. Sorry, guys. I know a lot of people say don't click out, but issue is I don't see that. I don't think. Am I plus $48? Oh, I do. Okay, yep. I'm up. Sorry. I'll just swipe. So I'm up $48 on AbbVie. It's at 73, so it's still overpriced compared. So, I mean, my average cost is still less than what AbbVie was at. So, I'm at 72, and it was at 71 something. But I bought a share when it was up. So I boosted up my average cost. I still have enough to buy AbbVie shares, so I'm not super worried about AbbVie. Right now I'm sitting at 64.20 for AbbVie plus the 31.50 for AT&T that I can't reinvest right now. Will go towards AbbVie for now. So I have enough for an AbbVie share, so I'm comfortable. Again, it's like, look at the 52-week high, guys. $96. It's at 73. So you have a $23 per share return. If we want to calculate that out, what's 23 times 60? Let's go ahead and do that. 23 times 60. Let's go ahead. So right now I'm sitting on a $1,300 profit. That's pretty damn good on a stock that I bought on a dip. Oops. So yeah. So again, I bought AbbVie for the dividend and its status. I wanted pharmaceutical in my portfolio. They're a dividend aristocrat. They have a great upside potential, and I get a nice hefty dividend while I wait for it to get back up if I choose to sell it. But again, I'm going to be a buy and hold investor, so unless I see $1,000 plus on that upside or that cash out, I'm not going to do it. Next is big oil. Boom, boom, boom. ExxonMobil. Another great stock. I'm down $130. Oh no, we should sell it. No, not really. I'm down $1.63, and it's $40 today. $131. That's okay. I'll get that in dividends within 2 months, so I'm not super worried about it. Let's look. 73. Again, really good buying opportunity for me personally on ExxonMobil today, and I can't jump on the sale. So this, guys, is why you want to have cash deployed. But again, if you're a dividend investor, you don't mind as much about the price fluctuations, but always keep a decent amount of cash. I have like 27 bucks right now in my portfolio for cash, just because it was the IBM sale, then um, I bought Exxon with it. Duh, I'm looking at it. I bought Exxon with it, so I have extra cash because IBM was $132 a share and ExxonMobil was only 68, so I had an extra like 50 bucks. So then I bought something. I bought another Altria share with the cash out of Macy's and SKT with the extra money from the IBM sale. So I bought 2 more shares of that. So anyway, ExxonMobil's down and I can't jump on it. So sad me. If I could do a cry face emoji, I would. But you know, it's okay. That's how it goes. I'd rather have my cash deployed and working for me, and that way I have more money, more passive income coming in. That's really the goal for me, is to have as much passive income as I can, and be that strict about it too. So let's go next. Target, which I don't get this. Retail Apocalypse. Target, how are you up so high? Honestly, it's a dividend king, so I'm going to hold this till I die. But regardless of how the market decides to fluctuate the pricing on it. But that's just crazy. It's up almost like 190 bucks, almost $200 a share. Not a share, that'd be awesome. No, $200 total. $200 a share. I'd be cashing out like a motherfucker. But Target, love it. Retail, great big, superstore type thing. Love the company, love the management. So, yeah, I'm up. Awesome. Again, not really selling. And then we have Walgreens, down 20 cents. I have a measly share. So sad. So the big portfolio killer is Altria right now. So screw you, Altria. Get back up there. So again, guys, like I said, don't worry as much about market volatility. That doesn't bother me. We're doing this for dividends, and I'm gonna have pretty much $200 coming in the next 2 months. So not super worried about a $410 loss, because I also get dividends from that and I can reinvest at a cheaper price. So when you're a dividend investor, down is well, it's always good to buy low, sell high. But as a dividend investor, it's even better to buy low, because then you get a higher yield. So again, this is awesome. Super happy with the portfolio right now. Are there any stocks you guys want me to do like a deep dive on, or give my opinions on, anything like that? I'm super open to it. We're down. That's okay. Down but not out. Focused but not finished. So thank you guys so much for watching. I appreciate it so much. I love this community. I love the people that I've found and the support system I have with my dividend investing. So the Gen X investor, Graham Stephan, Positive Investing, all you guys, I really appreciate it. You've been super welcoming, everybody that's followed my channel and helped me out, giving me advice on stocks throughout the year, stuff like that. I really appreciate it. I just want to let you guys know that this is hard. It's a risk, and when you do it by yourself, it can be very challenging to see minus $226. So, and again, like for me, it's not a big deal, because I'm kind of used to market volatility, and I understand that there's a possible crash coming. Whatever, that's fine. I'm keeping my money in. I'm a buy and hold long-termer. But it's just very important to me to be thankful about the people who have chosen to follow me, to watch my journey, and to support me through it. So I really do appreciate that, guys. Thank you so much. Remember to hit that subscribe button. And when you hit the subscribe button, knock out that bell icon so you don't miss any portfolio updates, the streaming wars, stock market news, stocks to buy and hold. I got so much crap coming out. But thank you, guys. I'll see you in the next one, okay?